Today is Tuesday, February 25th, 2025. Last week, the C market hit new highs before the first notice day, before correcting down below the $4 level. I'm Kylee Clancy.
And I'm Christopher Farron.
And this is Buying Season.
So I have a confession. I'm not like a podcast person.
Wait, like listening to podcasts?
Yeah.
Christopher, no. Me either.
Then why is this a good idea?
It was an idea from a fever dream.
Yeah, fever dream for sure. Well, we'd both been traveling. And you would just come from Ethiopia to India. You basically you DM'd me and you were like, "Hey, can I crash your trip to India?" And I was like, "No,
I think
dude."
I said, "What if I crashed your trip?"
Yeah, you said, yeah, that sounds right. And I was like, "I don't know, dude. I hate traveling with other buyers." And you're like, "Yeah, me too. I get it." And I was like, "Yeah, but okay, fine." And
dun, dun, dun.
It turned out to be all right. I really do generally hate traveling with other buyers. There are a lot of reasons for that. At the end of the day, I just want to just kind of sit there and be quiet.
Like, you say that?
Yeah.
But I feel like that was the exact opposite of this trip.
But that's why we're making a podcast. Because I don't normally talk that much.
Yeah, we just sat in a living room by ourselves for who knows how many hours. We had one beer to split.
We were very economical with that beer. But yeah.
That was for me, I knew that it was going to be a all gas, no brakes style trip when it was okay, yeah, this is probably the best flight for you to take. You land at the airport at 2:30 in the morning, 30 minutes after Christopher, and then you guys are just going to get in a car and drive 6 hours to be at the farm by the start of the day.
Yeah, it was perfect. It was great.
And I was like, oh. And
30 hours in transit. Yeah.
I think that set the stage because it was the first long-term interaction where we were just so we're going to be hanging out for 5 days. What do we talk about now? Was so jet lagged and so oh, here we are sitting in the backseat of this car riding through India at night. I'll speak for myself. I know that I was so tired and was just almost no filter. I was just well, we're going to be here. So let's just talk.
Yeah, I think that's right. I'd slept a little bit on the plane, but I was also trying not to sleep because I have my irritating super system of not being thrown off my circadian rhythm or whatever. And so I had to stay up. And so I don't know.
That's giving major grandpa vibes, and I don't want to
listen, when you get to be my age, kiddo,
your circadian rhythm.
Yeah, you'll understand. You'll understand someday.
I think I'm understanding it now, the way that my entire body is in pain. I'm what have I done? I just sat on an airplane. What is wrong with me? But yeah, I think that really did set the stage for us being wait, we're talking about so many things. And I know that for a while I've searched the internet for a coffee podcast where I'm I just want to hear people talk about these things. And I want, I know I can't be the only person having these questions. And there's just such a resource gap, I feel for all of the these kind of just really obscure one-off things that we're experiencing specifically right now, but just in general.
Yeah.
And that's when I was just I need to find a coffee podcast. I need somebody to just tell me what's going on that I can just listen to. And after spending more time, I was oh, I know who's perfect for this, Christopher.
No, you do it.
Yeah, my intention was for you to kind of take this project and run with it. But here we are. Now I have my own fancy microphone too.
This podcast is your fault.
Yeah, I'll take responsibility for it.
Okay, good. So
that's where even some of the stuff that we're getting into, I'm wait, guys, this is the stuff that I wanted to hear about. This isn't stuff that I should be talking about, but it's really cool that I get to ask the questions.
Yeah, we're venturing into the deep unknown, and there is so much that I feel specialty coffee as a whole should really avail itself of this information. But like you said, there aren't a lot of ways to access it. And between the two of us, we know a lot of people. So hopefully we can get the right people on to talk about these things and answer the questions that we have.
Yeah, and it's even just aside from all of the heavy data numbers stuff, I feel just people who work in coffee and get to go to origin countries or even just like work on the green side of things, you see so much.
Oh yeah, for sure. All right, so I think it would be really nice or maybe useful to have on someone who deeply understands what's going on in the market, because I know a lot of people have questions. You have questions. I have questions.
We all have questions.
We
This
all
is
have
uncharted
questions.
territory.
Yeah. We're like it's the Wild West, and we're no, I don't like that image. But yeah, we all have questions.
We have so many questions. It's like this is something that nobody has ever experienced before.
We're pioneers.
You keep using the weirdest references.
Anyway, so I think this one's gonna be a little like more technical guest this week to help us like unwind some of the mechanics of the market. So we've got Ilya Byzov, who's the head of research and quantitative trading for Sucafina. How about that title?
That's so heavy.
It's gonna be awesome. His newsletter through Sucafina has been like one of the most fact-driven, analytical, just bullet points, really quick missives that have helped me to understand what's going on in the market. And so I reached out to Ilya to see if he would come in and talk on our pod and take a chance on the first episode. He said he was down. So yeah.
Here we go.
Welcome, Ilya. Thanks for joining us.
Thank you so much for having me.
So, okay, market is above or at 400. Physical inventory is low. Ilya, how did we get here?
Well, I mean, it's a complicated story, but I think the complications really began in 2024 when the cocoa market did pretty much the same thing. So if you look at the cocoa market last year, cocoa went to all-time highs, about $4,000 a metric ton, and then spiraled out of control, moving from $4,000 a metric ton up to a high of 11,000 by end of spring.
Right. I remember seeing that. So you're saying those commodities are somehow connected?
I think so. As you know, about a third to 40% of the coffee futures contracts that are being traded are not traded by anybody who takes physical delivery of coffee. And so people that trade in those spheres move around from one commodity to another looking for stories. And this has happened to coffee this year.
Right. So coffee is just another stock that people can use to sort of just to hedge and speculate and make money.
Yes, absolutely. And so oftentimes that provides liquidity in the form of, you as a producer or you as a buyer of coffee don't necessarily have to interact one-to-one with a coffee professional in order to buy or secure your futures. You could theoretically buy a future or sell a future from another entity, like an index fund or a pension fund or a bank that is also active in the space. So it does, in a usual environment, create more liquidity in the market. However, when everybody drives in the same direction, on the buy side rather than the sell side, you have a situation where the prices just go absolutely bonkers.
Yeah, you're throwing out so many big brain terms here. Can we just back up a little bit? So we're putting the futures before the present, so to speak. Can you just tell us broadly how the C market works? Like, what do we actually buy and what are its mechanics?
Okay, sure. So the futures contract is the underlying contract for pretty much all commodities. If you were to buy a futures contract, that means you are guaranteeing an underlying commodity. So you would say that I have ownership of this contract that I would, if I were to take it until delivery, would then receive coffee. Okay, that specific coffee is tied to a grade. For Arabica futures contract, that's tied to a screen 15, a relatively clean cup Arabica that's usually kind of old, but think of a commercial grade Honduras that's kind of old, or a Brazil. And so that futures contract is traded in an exchange similar to the stock exchange. Prices for that contract move around, and oftentimes it is used as a hedging mechanism for producers because they want to sell their physical coffee and offset any price risk that they may have while they're delivering their coffee to the customer. Similar for a roaster, a larger roaster especially, the price risk can be fixed and offset so that they have a fixed price that they're working with for their product, and they're not oscillating in the market. They could buy a container of coffee for delivery, hedge it with the futures market, and then be able to offset the market risk on that while it's moving in transit from the place of origin until they're actually roasting the coffee. For smaller buyers, what happens is the trade house typically does the futures fixations for you.
The trade houses being folks like Sucafina, right?
Correct. Yes. So if you're buying coffee on the spot market, you notice that the price goes up and down, and it's going up and down with the C market. Some coffees have this, some coffees don't have this. Some coffees are like, for example, fair trade. If we're below the fair trade minimum, will not move with regard to the C market. Some coffees are just fixed priced and are bought at a stable level, and therefore they're not hedged in the market. But oftentimes, for I would say 75 to 80% of participants in the market that roast coffee and buy coffee, they're going to see the oscillation of the C market within the coffee that they buy.
So when a market is healthy, what does it look like? How does it differ from what we're seeing today?
Yeah, so when the market is healthy, you have ample liquidity. So this is why the exchange fosters or wants to have additional market participants in the commodities market, because they want to add liquidity, meaning that you're able to sell a future or buy a future at any time, and that you'll be able to get a price that's very similar or exactly the price that you're seeing on the screen. That's what you want. What you don't want is a very illiquid market where you're trying to buy a coffee future, or 10 people are trying to buy a coffee future, and by the time that you buy it, the price moves so high that it no longer meets the price requirements that you have. That's what we call a liquidity gap. And this is exactly what we're seeing in the coffee market today, where you could be buying a future, and then all of a sudden with that purchase, you're actually moving the market higher in a much more disproportionate way than you have in the past.
Wow, whoa, hold on. So we've got like what, 40 to 60% of futures are being hedged by folks who have no intention of taking those bags of coffee or selling those bags of coffee. But then we as roasters go in and buy coffee, therefore driving the market up further.
Absolutely. So it starts with the speculator. Some speculators are just mom and pop pension funds, right? So your retirement account may be tied to a portfolio that then invests in a portion of its portfolio in the commodities market, and they passively invest into coffee just because that's one of their portfolio features. Some other investors look at coffee specifically and want to chase a story and have what's called a discretionary position, where they are looking to speculate on the market. So they buy, and they know that the roaster has to buy. It's pretty obvious. You could read it. You could look at public statements that roasters are generally undercovered right now.
Right.
Because of the prices and because of interest rates being so high, they're not buying as far out as they used to be. And so what's happened is the speculator is almost timing to buy ahead of the roaster, forcing the roaster to buy higher.
So we're all kind of just like playing a really twisted game. Like, who wins? Like how does anybody win in this?
Well, the farmer wins.
Okay.
So if you're a farmer in Brazil, and we've just done these calcs, and for just to give you an idea, the median farmer in Brazil, and this is so call it average Joe farmer in Minas Gerais, has 30 hectares of land producing 25 to 30 bags a hectare, meaning that they typically source about 2 to 3 containers of coffee per year that they produce. Usually, after all expenses, on a typical year, they'd make $25,000 to $30,000 of profit. This year, we estimate they've made $160,000 of profit. And if they were to sell all of their coffee today, they'd be making $260,000 of profit. This is an average. This is US dollars. And this is for an average farmer in Brazil.
That's kind of sick.
So there's definitely a winner here, and that's the farmer.
But that's if they sell, right? I'm hearing from a lot of folks that not everybody is selling.
I think farmers are happy to sell. So farmers have sold. The issue is that there is less ability to buy. So we as a trade house, we operate with, let's say $10 billion of working capital, right? If coffee futures are at $2 versus coffee futures go up to $4, that means that we can buy half of the underlying coffee that we used to be able to, because we now have the same working capital, but our price of coffee has doubled.
Sure, sure.
We simply cannot buy as much as we were able to in the past.
Plus prime rates going up from back when we didn't buy enough coffee 2 or 3 years ago.
Yes. Yeah.
Yeah. Perfect. That sounds like a perfect storm.
And the cycle kind of repeats itself with every contract that we go through. And specifically from a roaster perspective, there's a timing that happens where the closer you get to the expiry of the contract, the more it goes up.
Right. Of course, we saw that just 2 days ago, right? Our first notice day.
Exactly. Yesterday, when the contract expired, all of a sudden you had a 20-cent sell-off.
So what's our way out here? Do we just hold our breath and stop buying coffee? Do roasters switch to tea and everyone's matcha house now? Like what's our plan?
I think it's a 2 or 3-fold strategy that needs to happen. The most obvious one is wait it out and wait for the new Brazil crop to come. So hope for the weather to be better, but realistically, if a farmer's making $200,000 when they used to make $30,000, they will use some of that money to reinvest in their farms and they will produce more coffee.
Sure.
So eventually, even if the weather isn't ideal, there will be places that produce coffee in a larger amount. So eventually the supply will fix itself and the issues that we've seen will correct, but that's a very long time away.
Oh yeah. Right.
What we're seeing is that in best case scenario, probably by September, October, things couldn't start to normalize. But there's a lot of time until then, and who knows what the market could do. I mean, looking at cocoa, 4,000 to 10,000. That's equivalent to coffee going to $7 a pound for the futures market. So the other big one is, what can happen is that prices for the consumer go up such that the consumer starts to actually drink less or make, let's say, smarter choices with regards to how they drink coffee. I think that price threshold where the consumer starts to drink less coffee is significantly higher than most people think. And we're starting to see that case with some markets where you've already seen prices on the shelves in supermarkets increase 60-70%. But nevertheless, you could, if you see a demand contraction and the roaster simply roasts less coffee because they're charging the customer more because the price is higher, that's going to slow down the pipeline. And then the biggest one is the roaster says, okay, I need to fix. I need to secure my supply for 6 months at a time. This is the price level that I'm still comfortable with. And I'm not going to chase this every week or every month, to look for a lower price level. I need to secure out my supply. And once everybody does that, the speculator will no longer be able to do what they've been able to do for the last 6 months.
This is where I'm like, this is so much. It's so much bigger. Like, I already knew it was like bigger than kind of what I see on a day-to-day basis, but it's like so much bigger than all of that. Right. And it's like, of course, I mean, personally, I'm like, I'm so stoked that producers are making more money, like good. But then it's also like the end goal of how do we convince customers to pay more, right? Like, I don't know. It's one of those really tricky things where people are buying coffee for $1 on the street, like in major cities or all over the world. And it's such like a bigger industry movement, at least in my opinion, to try to explain to customers why the cost of coffee needs to go up. Because it also then poses that thing, if all of us raise our prices now, then what happens when the market swings the other way? Are the prices going to stay high?
I mean, I think you have to be fair to the customer that if it's a short-term issue that causes prices to go higher, they should pay higher prices for the short term and not forever. Once prices stay low, I think that the roaster should be open to reducing that price and not keeping it as margin. But I think in my mind, I'm always about, sort of fairness and seeing, working through it as an industry together. And so my suggestion would be to work with the consumers and work with the accounts that you would have, and just discuss the situation. Say, hey, this is what's happening. In order to stay in business, we have to do some of these changes, right? And I think that looking at other industries and looking how cocoa's done it in the last year, because they're literally 1 year ahead of us in this price cycle. The consumer had been generally able to accept the story, which is, weather conditions have caused a major shift in production lower. and the consumer is going to have to pay more for chocolate in the near future for some time, for quite some time. I think eventually it will reconcile and prices will come down, but in the end, this is a tropical commodity that's produced in a very, very small number of places that can actually grow coffee or cocoa. And when things go wrong, it can go wrong. It can go sideways very, very quickly and can go pretty bad. So I think that what we need to do is the best thing the market is doing is what it's doing right now, which is incentivizing the producer as much as possible to produce more.
So is there some mechanism within the market that can keep it sort of more tightly controlled in a healthy level where producers are making good money and roasters still feel comfortable to make money?
Yeah, absolutely. I mean, one of the ways that we've done it in the past is having the roaster and the producer secure their prices for multiple years. So being able to hedge a few years out. Now, the current environment does not allow for that because of something else called the structure of the market, or the way that the change in the futures prices is happening. It's a whole other thing. But if the market were to correct to some normalized threshold level, I think this is something that we as an industry need to look at, because it's completely possible, and it had been being done where the producer is able to hedge coffee 1 or 2, 3 years out. And similarly for a roaster, there are roasters who buy 360 days in advance, so 1 year out, and that really helps to stabilize the price. And so that this sort of, the more hand to mouth that the industry gets, the more volatile the price action tends to be.
Sure.
So being able to price further out at fair levels is important. The other one is direct trade. This is something that can really help. That obviously there's significantly more risk now in direct trade than there probably ever was, because the producer has the ability to sell their coffee at a potentially even higher level than they've negotiated. But if you trust the supplier and you've worked on a relationship that's been very fruitful for many years, this is the time to reap that benefit and say, let's continue working on a relationship that's, and a price that's fair for everybody.
Ilya, thank you for being a light in the darkness here, and helping us make sense of what's going on in the market. Thanks for your time. Stay safe out there.
All right. Thanks so much for having me, guys.
Thank you.
All right. That was Ilya Byzov. Thank you for shedding some light on the market. Ilya's newsletter through Sucafina is a must read. Check it out. I feel better.
Do you?
Yeah. Don't you?
I don't know.
Why not?
I don't think so. I don't know what's real anymore. I'm like, we're talking about
a simulation.
A chart. Yeah, like we're looking at a chart that's dictating how much money people are making, and the chart is being dictated by fake coffee sales by people who don't even work in coffee. That's
right. Yeah, you're correct.
So like I don't even know what's real anymore. And I'm like, well, we're here. Mm-hmm. And we're gonna keep figuring stuff out.
Yeah, I mean, you still gotta buy coffee.
I mean, yeah, and people are still gonna grow coffee, and people still want to drink coffee.
So on and on we go.
So we just gotta keep doing it, I guess. Oh, it's a beautiful day to be a coffee buyer.
It's a beautiful day to be a coffee buyer. All right, I think that's it.
We'll see you soon. This is buying season. Bye.